Welcome to the Crypto and Blockchain Talk.
Hello.
Hey.
Guten Tag.
Aloha.
Hola. Shalom.
Hello.
Namaste.
Ni hao.
Privet.
Hello.
Salut. Yassas.
Salve.
Ciao.
Bonjour. Our podcast talks about the latest trends in the worlds of cryptocurrencies and the blockchain.
Hello, everyone, and welcome to this edition of Crypto and Blockchain Talk. And today with me, I have someone who's going to be talking to us about his crypto-backed mortgage platform. And the gentleman we're going to be speaking to, his name is Josip Rupena. He is coming on to talk to us about his company, Milo. So before we go any further, let's welcome Josip onto Crypto and Blockchain Talk. Hello, Josip.
Hello. Very nice to be on the show. Thank you for having me.
Now, I want to get into your company in just a moment. But I think I first want to preface everything we're going to be talking about. I want to talk about this great Chinese mortgage strike, which I'm sure your finger is on the pulse on. It's something that's very significant on the world stage, especially when we're talking about the world's economy and, maybe there's a repeat of the greatest hits of 2008 coming. But right now, there's thousands of home buyers in China who are refusing to pay their home loans. Part of that pie is that the real estate sector in China is collapsing. So to give a little bit more of a detailed picture, there's like hundreds and thousands of home buyers in over 70 Chinese cities who are not paying their mortgages because property developers are struggling to complete these building projects. And real estate does have more than an important piece within the entire picture of what's happening on the financial stage. When you're looking at what's happening in China, do you think to yourself, okay, we have this product, it's called Milo. Now it's about US home loans, obviously, but do you think to yourself, China is not a place maybe we should be launching our product? So go for it.
Yeah, absolutely. I think that this is a really reminder of how intertwined governments are in real estate and in mortgage markets around the world. They are connected in the essence that they provide the backstop for financing. Depending on what they do, has a really significant impact. It's something that we're experiencing here in the U.S., that the government is getting out of the mortgage. It's causing our interest rates to really go up. Now, what's happening in China is an entirely different story, but important nonetheless because of how much of their economy is related to real estate. A lot of developers are not really living up to their agreement, and I don't know how I would feel about living in a partially completed property either. In this country, we usually make sure that properties are completed before we start making mortgage payments on them. So maybe there's a lesson there. You probably want to start paying when things are done.
But mortgage demand in the United States has slumped to its lowest level since 2000. It's a pretty obvious thing to kind of happen when you have inflation and aggressive interest rates, which obviously are very important to the average person in the United States who's looking at making a pretty significant purchase in their life. Do you think that with mortgage applications now at the lowest point since 2000, that this is going to be something where it's only going to be overcome once the entire economy straightens itself out? Or do you see this entire space waiting for significant world events to straighten itself out, such as, I don't want to talk about really wars or anything like that, but, what's happening in the Ukraine or what's happening in terms of other significant events in the world? There's some growing tensions in some other areas of the world. So do you think it's going to totally depend on just the U.S. economy strengthening itself again, such as the printing of money, or do you think it's more to do with what's happening on a global level?
I think it depends who you ask. If you really think about it, there are two individuals. There are the individuals that bought homes and refinanced at a very, very aggressive level over the last few years. So I would say that they're net winners. because now they're sitting on mortgages that are 2 and 3% for the next 30 years. It doesn't matter what happens in the world. If you ask an individual that doesn't own a home, where now they're having to pay higher rates, it's not as attractive, but it's still attractive in a context of history where rates are still relatively low, rates being very, very low for a long period of time. And that risk transfer was that the majority of U.S. homeowners got a benefit of really paying a lot less of their borrowing costs. And that meant that that excess income and disposable wealth could be deployed into other areas and could be deployed into broader investments, like the equity markets, like the crypto markets. And now they're continuing to be the individuals that have to pay higher borrowing costs. They may not be able to do as much of that in the future, and that has an impact. But this transfer of risk around lowering interest rates, that's really been punted off to institutional asset managers that are sitting on that have lower interest rates for longer periods of time. And now they're looking at how they can actually generate a higher yield. And this all has an impact with rates rising. Now, this ultimately has an impact in terms of growth of this country and how much we're able to do at these levels of rates. But it really does start to go back into the aspect that the government may have to get involved by lowering rates to stimulate our economy. And the question is not whether they do that. The question is when they will need to do that. And right now we're in this cycle with inflation that's going up, and much of it still tends to be transitory. But there definitely is real nominal inflation out there, and we're still on probably that curve as opposed to things sort of normalizing and thinking about growth. So we've got a little while to go there. All of these events around the world, though, they definitely have an impact, how that sort of cross-contagion plays into our economy. And when that happens, they may be forced to actually want to.
So now that we've highlighted some really significant and underwear-changing events that have to do with mortgages, I need to know how and why to launch Milo.
Great question. It really was rooted in my experiencing and traveling and growing up, traveling around the world and working with international clients and spending time with international clients, and really how significant it was for many, many individuals around the world, and the strong desire to want to really invest in the U.S. And how important that was for them. So my career, I started in finance, worked at several investment banks, and how the world works, how money moves, how investments happen. And ultimately saw this opportunity that a lot of international consumers were investing in real estate in the U.S. And they were doing it without mortgages. And everybody told me mortgages. And I never really bought that. And I started asking the question, started to probe. And it was because most of the time they weren't looking for one because they knew they weren't going to qualify for a mortgage. And really around that idea. At the time, it was really 2017. And I thought the same thing could happen for individuals that were amassing Bitcoin and crypto wealth, that they would at some point probably have desire to want to be able to buy real estate. And but it was ultimately too early. And thankfully, I didn't launch the business around that idea in 2017 and got comfortable with working with international clients and launched the company, and really came back to that idea last year and was able to go out and launch a crypto mortgage product. But it was really all rooted probably in just my upbringing and who I spent time with, and sort of seeing the world from a different lens that motivated to go and start this company.
You look at the website, and even though you have like a header bar record 10 million in crypto mortgage loans originated, and then it says U.S. home loans for anyone, anywhere. And the strapline, achieve your U.S. financial dreams starting with home ownership. Now, of course, that's everyone's dream. First of all, it's almost everyone's dream to live in the United States. As much as I love the U.S., this world is so gorgeous. There's so many amazing places to live, but it's still a dream for many, many people around the world. And you have this map. You have Mariana in Colombia. She's refinanced 1.2 million in Florida. You've got, who's the other guy? I have to wait a minute. You got Federico in Argentina. All these people obviously know how to tango. They all have the right names. These are real people. Okay.
We do.
That's amazing.
We last year we had people from overseas come to us and apply and try to get pre-qualified so that they could buy real estate in the U.S.
Okay, well,
so I want to. It's been thousands of them. So, yeah.
I want to hear all about that, because before I'm going to ask you that specific question, what I find is a little bit taking away is that according to your website, you don't need a credit history or social security number. It's a 10-minute online application. Even if you're a U.S. citizen trying to do anything in 10 minutes with a close in under 30 days and then no credit history or a credit history that's Equifax or social security number required, it's a big what? I mean, I need for you to now explain. I would like you to wrap that into how in the world people contacting you and going, yeah, I want to buy a house in the United States. Let's get it on. Go for it.
Yeah, that's a big one. That was when we started the company, that's what we were really faced with, and said, well, you've got this that is on the other side of the world. They want to buy a property here, and they don't make income in the U.S. They're never going to make income in the U.S. They don't have taxes. They may or may not have a social security number. Some of them may have gone to school here in the U.S. And how do you underwrite this consumer? And we really looked at the space, and we looked at where do mortgages go? And we saw that there were some regional banks that were working with some of these consumers, and we really stressed this performance and understand what they were doing and why they had done well through up and down markets. And applied some of those concepts to how we fundamentally created our underwriting models. But it's really rooted in credit scores are backwards looking, and they're only one part of the equation. But so much of it in how you do mortgages is priced on that credit score. But if you think about a consumer and you say, well, there are many, many aspects that come into play when you want to lend to someone, and it really boils down to two fundamental ones. Do they have the ability to pay? And do they have the willingness to pay? And when we looked at that, we said, well, we're working with an international consumer that is more affluent. You structure the transaction and you make sure that they either put enough in a down payment. And if that property is likely to probably be rented and it's generating some type of cash flow, there are some means of repayment. So they have the ability to pay. And now the question is, do they? And that willingness was really rooted in how the transaction was structured. So we started with that principle. From there, and said, let's wrap everything around that. And we ended up in a place where we said, well, social security number is an interesting thing. A FICO score is an interesting thing. But all of these other things precede that, because many people that are very, very wealthy, we found, have really, really bad credits. It doesn't mean they're bad credits. It just means they may not pay their bills on time, but they definitely can. So we really started with that. And then, that took us to think about it in a very similar way around our crypto mortgage product. But it's really how you think about some of the risk, but not all the risk. So it's just one data point.
Okay, so there's two parts it looks like. You can buy with crypto, so a crypto mortgage, or you just get a traditional fiat-based mortgage. Is that correct? Because you have the black button and the blue button. So why would, that's like a ridiculous question because I think I know the answer, but I'd still want you to say it. But what makes you stand out is the fact that you obviously offer crypto mortgages. So why are you offering then just the normal run-of-the-mill, traditional non-crypto mortgages as well?
Well, it's for us, the non-traditional or mortgage, meaning for someone that is buying an investment property or someone who can't document everything, or it's an international consumer. If on crypto, that's that product for them, because our loans were fundamentally not underwriting it the way that it's being underwritten to a Fannie, Freddie agency loan that is conventional by standards, where you need to check every single perfect box to be able to get them. We solve with that product all of the other customers that still want to buy real estate but may not be able to paint that perfect picture. And the crypto mortgage product is specifically for people that have crypto and are comfortable pledging, because they know we offer that first product. They came in for a crypto mortgage, but they came across that other product and they basically said, where have you been this whole time?
Yeah.
I could have gotten a mortgage with you 4 years ago if I knew you existed. We're some consumers that come for a crypto mortgage, but ultimately get that product and that solution. And we want to do what's in the best interest of the client. If they are comfortable selling some of their Bitcoin and willing to put it down, that first solution might work for them. For the other individual that says, I absolutely don't want to sell my Bitcoin, and that's the reason why I want to work with you, and I want to finance up to 100% with no dollars just by pledging my Bitcoin, then I want that solution. But we want to give the option and really help them select what's in the best interest of their long-term decision and buy real estate. So.
Okay, so this is just another question. It's not like anyone on the Interpol top 10 can like buy a house through you, right? Is there some kind of vetting, some kind of KYC AML thing going on here?
Absolutely. Yeah, we do AML, KYC, know your client, and we do screenings on the individuals. We do screenings on the digital assets. We definitely need to understand who we're doing business with. So those individuals that you described, they probably wouldn't get very far in our process. This is a long-term relation. Right? We got to know who we're working with, and just like they want to know who we are, we want to know who they are. So
absolutely,
I think it's a fair trade.
I absolutely agree with that. And actually, I just clicked on something where it says anyone with a U.S. visa can apply for a mortgage on a U.S. property. A goodly portion of people from all over the world. So let's walk through the process. Believe it or not, I just tried to. I thought, okay, I'm actually apply while I'm doing this podcast. So how does it work? I've seen a property I want to buy, and it costs. Let's just deal in round numbers. It's $100,000. What do you need in terms of a down payment?
So if you're applying and you want to access our crypto mortgage, you would just need $100,000 worth of Bitcoin, ETH, or USDC. And you would run through our application. You would answer the different questions that come up. And there would be certain requirements of information that we need to gather. You would ultimately pay for an appraisal payment. So we could go out and order an appraisal on your behalf. And we do a lot of work behind the scenes around making sure that there's no liens on the property, making sure that there's anything that's going to jeopardize the borrower transaction. We're going to make sure that there's proper insurance on the property. But ultimately, we're going to do a lot of that operational work behind the scenes to make sure that this transaction is a good transaction for everyone involved. But we're going to be able to finance up to 100% of that transaction. And that's it. And we get comfortable with that because there's the real estate where we have a lien on it. And then the Bitcoin is really what protects us in the event of non-payment. So you don't have to go to essentially the nuclear option, which is 411, which really is a cost that the borrower needs to incur that gets really, really drawn out. We have the ability to liquidate some of the digital asset to really protect the borrower in this transaction and make sure that we're paid. Really get comfortable with that. But ultimately, it's a very, very quick process. And it's significant that we're able to do this in that period of time because we are a direct lender. I don't need to go and ask the U.S. government, are you okay with this borrower and me doing this mortgage internally? And ultimately, if it passes our checks, we're going to do that loan. And, we'd like to try to do that as quickly as possible and as quickly as the borrower is willing to run through the application.
Oh, so you're literally just holding that crypto in escrow. Is it just Bitcoin that you're looking at?
So Bitcoin, Ethereum, and USDC.
Interesting. So USDC. Are you looking to expand on those?
I think we will over time. We definitely get lots of requests, lots of interesting requests, making sure that it's good collateral. That's collateral that we believe can survive longer periods of time, and that people want to hold it, and that it's compliant as well. So I think the answer is yes, we will. I don't have an answer on when that'll be, but we definitely sort of fairly often.
So when people are obviously saying, okay, I'm going to give you 100,000 worth of, let's say, Bitcoin, for them to, I'm just trying to figure out how it works behind the scenes, because if someone gives you Bitcoin and it was when it was, let's say, at 60, but now one Bitcoin, let's say, let's be generous, or let's just say at 20, right? How do you manage that behind the scenes? Is it because the value of the property is more stable? Just, can you walk me through that? Because I'm just trying to understand how, as a company, you guys can actually work in some kind of, in a positive balance sheet when, crypto's so volatile. I understand that obviously real estate, unless there's a massive crash, but we've already covered that in the beginning of the podcast. If there is really something that's going to happen, how does that work?
Yeah, it's thinking about the combination of both collateral, both the real estate and the Bitcoin.
Yes.
That's important. That aspect that, why do we say it's a 1-to-1 ratio? Why do we want a 1-to-1 ratio? Well, we believe that if the value of the Bitcoin were to go down 65%, that could create some stress in our model because there may not be enough, essentially skin in the game by the consumer to make sure that they want for their mortgage. So those are levels where we're going to ask the customer to potentially deposit more, or they could reduce their overall loan balance. Because keep in mind that in this transaction, there are essentially no dollars. So anything that we choose to do, we're going to have to reduce our risk in the transaction. But because there's no dollars in the transaction, we really have to look at the Bitcoin as recourse. And we really get comfortable with it because when we modeled out historical drawdowns, usually, they really didn't supersede sort of that 65%. So from the point of where we started lending and close transactions, we have yet to have to margin anyone proactive when we reached out to them and told them, we might get into situations that, we could get pretty close. Some of them proactively deposited more Bitcoin and they pledged more Bitcoin. But it really all comes down to really transparency and explaining how the products are the possible scenarios that can happen with the customer. But they are looking at the crypto markets just as closely as we are, and so they're aware of those levels.
So you're only right now offering these loans in the United States. When are you going to make this more of a global phenomena? Because to be quite frank with you, I think this product is actually more needed outside the United States than inside.
I agree with you there. We have gotten a lot of requests from people in many, many countries around the world.
I mean, really, the overseas market seems to need Milo, I would say, in more instances than the American real estate marketplace needs Milo. I mean, this is definitely a global product. And wouldn't you agree on that? And so is there plans afoot for you to actually do something about that?
Yeah, absolutely. I mean, it's definitely is a global product, just like Bitcoin and digital currencies are global in nature. I think this is something that we definitely want to bring to other parts of the world. I think right now we're deciding to start here in the U.S. because we know that market. We understand how the laws are structured here and regulation and everything that goes with it. But we definitely have aspirations to go to other places because interest rates are significantly higher there. There are many places where lending doesn't even happen as well, or the loan terms are really not favorable. And we feel that owning real estate and having property and title rights is a really great wealth creator and enabler. So we definitely want to be able to do that. I think it's just a matter of when and not if.
So I got to ask you this. I was reading an article, actually. It's an article that was in I'll have to look and see where it was. The Dallas Business Journal, that famous paper made famous by maybe the television show Dallas, who knows. But anyway, in there it said that the North Texas home builders are seeing an alarming surge in cancellations of contracts on new homes. And this is actually starting to trigger this sharp drop in sales. And it really just, I don't want to say it's kind of like making another panic scenario. But when you see these kinds of articles coming out about builders being whiplashed by buyer demand, which soared in the early days of the pandemic and then have just plunged with this onset of higher mortgage rates. So what's going to happen then in North Texas to that home buyer's market? And how do you guys at Milo take advantage of that?
It definitely impacts the home builders. I think when you look at reports like that, you really have to understand a little bit of, what happens when someone puts a deposit for a new construction home. Those amounts of capital are not really that large. They're not putting 50% of the value of the home down. They might be putting $5,000 or $10,000. So for some individuals, it's actually pretty easy for them to walk away in situations where maybe they don't feel that it makes sense for them, or they actually feel that they just might get a better deal 3 months from now or 6 months from now. It does impact home builders because now they have to go out and find someone to buy that home. But the reality is that in the U.S., we still have a 3 million plus home shortage. And a lot of people need somewhere to live. And there are plenty of institutions and individuals that are happy to basically scoop up those properties and rent them out to someone. So I think that we definitely look at that, but it's really market by market specific. Home builders usually are very, very tied to consumer sentiment, because the better consumers feel and the more homes they want, the more likely they are to put down a $5,000 deposit on a home that might be built 2 years from now. So it is a leading indicator. So I think that definitely there are rumblings out there of what may come with home prices, but I think it'll be buoyed by there's just not enough homes for everybody right now, and most of the individuals that want homes are getting into peak home buying years. So I think a lot of that will support prices. I'm not expecting that we'll have this massive sell-off like we did in 2009. Very, very different market, and I think that this is the reason why a product like ours is attractive, because if there is a correction, then I think people will be able to go out and maybe buy a home at a better level than it is today. So I think that it presents an opportunity.
Well, exactly, because that does in many ways present an opportunity, especially for someone who's looking to purchase a home. But again, just reflecting upon what's happened in China, where, they also, as we discussed at the beginning of the podcast, they tend to buyers tend to buy apartments even before they've been built, so like off plan. And because there's been that crisis over debt repayments, because the fund's running dry and construction stopping, so therefore people stopped paying for their mortgages and paying for the apartments, leading to this whole crisis. Yeah. I mean, that's not something it's certainly not new to anywhere, and as we just talked about here in even Dallas.
But they're making mortgage payments, so they're making payments on properties that are not completed. The home builders here, these individuals have put deposits on a property that will be finished 2 years from now, but they're not making payments on them yet. So they can walk away from their deposit. In China, they're having to make mortgage payments already, even though that property is still not finished.
So can I ask you this question? I thought about this last night, and maybe I'm giving you an amazing marketing idea. That's okay. I'll let you owe me one of your wild craft beers. But I mean, why, or maybe this is like in your grand scheme plan of how you're going to take Milo, but are you guys going to get more than into like the proactive side of selling homes? So almost, I would say, kind of like your own real estate website, where not only are you supplying the solution in terms of financing, someone's future home or second home or whatever you want to call it, but, also showing them what's out there, because, I'm not sure if people really even understand, especially if they do have, I don't even know if I can call it spare money, but if somebody wants to, for some reason, buy a property in the United States, many people don't even know where to look or what to look for, and they don't know prices. So is this something that you see yourself getting into, or doing some kind of partnership with some other online agency? Is there any breaking news maybe you want to tell us?
Yes, it's definitely, we definitely think about that. I think that when we look at really both products that we offer someone that is ready to transact and they have a purchase contract, or someone that wants to refinance a property that they already own, they can access our mortgage product. But then we also have another product which allows people to come in and get pre-qualified and get pre-approved to see how much they can afford to buy, and they have the conviction to go out there and transact. So that segment of consumers, we've had over 3,000, I think the number is even higher than that, people that have come in and have gotten pre-qualified for hundreds of millions of dollars. And their challenge today is that they can't find those very same properties. So it is something that we are thinking about internally. How do we make sure that they're presented with potential properties that they can go out and buy that are attractive, that make sense for them? And do we partner? Do we provide that data directly? What do we do to be able to help these consumers? Because we've already qualified that they can actually go out and borrow and transact and afford these properties. So it's definitely something that we're thinking about. I don't know if there's any breaking news, whether we're going to be doing it in the immediate term, but hopefully in the future we are able to offer that, because I think we would definitely help a lot of people by telling them how much they can afford. And here are 3 or 4 properties that I think make sense given your desired criteria, and we can really help them move that process along.
Absolutely. I mean, I can see that being a very, because people are lazy. They really are. And, you know, they don't want to have to do that kind of, especially if if there are certain parameters that they really don't care about. So in other words, if, you know, they just want someone to find them any kind of property within a certain area. But, you know, I mean, heck, there's so many things that you can do there in that space. But you started Milo, funny enough, during the pandemic, really. I mean, you really did. So were you at all worried about what was going to happen, especially when, even we all know during the pandemic, just like it is now, everybody, you know, everyone just talks smack. Everyone's always talking fear. For some reason, people just like to scare the crap out of each other. I don't know why that is, to be quite frank. I mean, life is scary enough. You don't need people frightening the hell out of you. You're going to die. There's a recession, you know, but, you know, did people actually say to you, you know, why in the world are you doing this? I mean, people right now are even giving up their offices, and, you know, there's like nobody who's even going into the office. People don't have money. They might not have a job, et cetera, et cetera. Where are they going to get money to like invest in this stuff? I mean, did you have like people coming to you telling you that you were a little bit nuts for starting Milo?
Oh, absolutely. All the time.
Was one of them your wife?
Oh, yeah, she's probably the first one. But still supportive enough. So I think that, you know, the reality is that most companies, they need to be able to be successful in good times and in bad times. And it's very very nice to believe that you can build a company and make it this massive company in 12 months. The reality is that it takes many, many, many years. And if the business that you're building can't withstand some of these events, then perhaps the value prop isn't as strong as you actually think that it is. And it really helps me to zoom out a little bit. If I read something on a day-to-day basis, sometimes you just want to curl up anything out there because it's quite frankly, a lot of it, you sort of look a little bit longer and you say, okay, well, over the course of a couple of years or 5 years or 10 years, you start to see that there are real opportunities out there. And I recall 2009, 2010, and things were really, really, really bad. But it didn't take long for things to start to get better, and then better, and then better and better. And then ultimately, a lot of amazing companies were built through that period of turmoil and became very, very successful stories. So I think that, you know, we hope that what we're doing, we're helping enough consumers. And if we help enough consumers, and they'll tell their friends, and they'll tell more of their friends, and we'll continue to figure out, well, what else can we help them with? And that should be able to survive longer periods of time. And one little storm shouldn't derail, you know, the broader mission of our company.
You know, I do have to say this because I thought about after the first part of the interview, I obviously had a lot. Normally, I don't have time to contemplate. I don't normally think about it again because it's kind of like a shut book. It goes on the shelf. And then, some projects I will keep an eye on, right? But normally, like I said, it's a shut book. It goes on the shelf. But I had time to think about your project. And I know that you had a raise, and you raised 24 million, and I don't know over what period of time, but it looks like that you raised $24 million. And I thought to myself, out of all the SH1T projects that I've seen in my life, including, by the way, projects right now who are raising money, who are quite frankly just junk. It's incredible that I'm not going to name names because I just can't do that. But I just saw a new project that's just raised $100 million and got a valuation. It was a little over that. Got a valuation of $1 billion, and it's just toilet paper. And I thought to myself, how is it that these better projects that are out there, because your project looks pretty fabulous, I have to tell you. I really started to look. It's absolutely fabulous. Why do you think you capped out at 24 million? Was that on purpose? Are you being picky about who you have investing? Do you have another round going out? Because I'll be honest with you, I can't believe that compared to some of the junk that's out there, that, you know, all you've got was 24 million.
Mm-hmm. Yeah, it's a great point. I mean, I think that the way I think about capital and fundraising is that you optimize around the partners and the investors and the people that don't just come to you with a check, that can really help you with your business, and hopefully you bring enough smart people together. You can solve and you can weather challenging periods of time and build something that's everlasting. And we definitely didn't optimize around taking the most amount of capital or the highest valuation. That was really something that we thought after the fact, where if I could find the right investor, I have to make sure that there's plenty of upside for them as well. And so I am not a fan of taking the absolute highest valuation, because all that means is that the next time you actually have to grow into that, and that next marker is significantly higher. And for many companies, it may be unattainable, and they may not be able to raise capital at valuations that they did. And that's okay. They may not need to. But I felt that it was important for us to continue to basically hit our milestones and prove what we're doing, and continuing to validate to the market, continuing to validate to ourselves, to our team, to our investors, and to everybody that's involved. And if we continue to make progress and we show momentum and we are truly creating something that's valuable, then there's the opportunity for more investors. And I really believe that you've got to make sure that you've got plenty of upside for the next set of investors, where if you take everything out in the first squeeze, that's not compelling. So, at some point we'll figure out how do we allow more consumers and more people and more investors to participate in what we're building, and we'll think about that. So I'll say that there definitely will be future fundraisers, and then I think we'll think about how do we get that into more hands. But we're making sure we keep one foot in front of the other.
But you have a partnership, or what do you have going on with Coinbase and Gemini? Is there a partnership?
So we
there?
work.
Oh, go ahead.
Yeah, so we work with them from a custodial perspective. So for us, it was really important to look at who was out there and who was trusted and reputable and ultimately regulated and had gone through audits and was insured, because we wanted to make sure that the assets that belong to our customers were in a safe place, and we decided to work with them. And that's something that we're constantly contemplating, and who out there in the ecosystem lives up to the same values that we have, and making sure that our clients' assets are safe. So we're constantly having conversations with different partners, whether that be potentially on the distribution side, or whether that is on the capital side, whether that's investors, whether that's bank partners. We're constantly talking to different players, and if there's the opportunity to work together, I definitely believe that there's a benefit, because it allows us to move much faster in collaboration.
Now, you used something before. I was very proud of you. I almost gave you 1 million or 1 billion Aviva points because you actually said value prop, which I was very proud of you. That's a very good marketing term, value proposition. I think you're the first person in any episode to ever mentioning such a marketing term. But there's also another term that's kind of been associated with Milo, which is, and I got to tell you, I love these acronyms that we use in crypto. ReFi, not DeFi, not GameFi, not TradeFi, not it's ReFi. So, in other words, reimagined finance. Did you know that this was being attached to your company's name?
I hadn't, so thank you for pointing that out.
Well, yes, apparently, you are, according to an article which was sent to me by your PR agency, that you are innovating the crypto space, which you are, with plans to launch a crypto refi product. Now, I'm all one for acronyms and everything, and obviously we love to talk about all that stuff on this podcast. But it leads to a couple of questions. So, refi is a DeFi as a service platform on the Ethereum network. So, are you guys then, how does it work in terms of the blockchain? How are you guys set up on the tech end?
Yeah, so for us right now, we're not doing anything directly with blockchain and how we're integrating our loans into that. I think that's something that we're definitely looking at and seeing how we can potentially incorporate it. I think what we will incorporate some aspect to it at some point is how do we really bring real world yield to more counterparts in the crypto ecosystem, because I think fundamentally we believe that mortgages as a whole are one of the safest risk-reward asset classes out there. And the reality is that very few people have any exposure to them. And if you think about who actually has exposure to mortgages, it's always very large institutions and or the U.S. government through Fannie and Freddie. So we're looking at it from that perspective. What was really important for us right now is to not go out there and try to really incorporate all the elements of smart contracts and introduce all of this complexity. We really wanted to validate that consumers wanted a solution like this. And then after that, start to incorporate more technology to try to make it more efficient. But we wanted to start from the consumer side as opposed to overweighting everything on the technical side. But maybe that technical side would prohibit us from being able to get out to market because it would take us a really, really long time to build all of this technology, which is still continuing to be developed. We wanted to make sure that we were getting the product into consumers' hands before we actually dove into that. But there's definitely lots and lots of places where we will incorporate that over time.
So in terms of also growth and plans for the future, what are your opinions on fractionalized ownership of real estate?
There is an opportunity around it. I think right now, a lot of what I'm seeing, though, it's so state by state specific here in the U.S. that anything that you do in DeFi or anything that you do on the blockchain, you have to do the same thing in the counties and record them and do it in the old way to protect yourself as you're sort of deploying capital. So I think that there is some element of fractionalization that will have a component. The question is, how does that transfer to most individual consumers? And it could be on the capital market side, or more capital comes in that allows more innovation around lending programs and who you extend credit to. But it's definitely on the earlier side of where we are. And I think that attorneys are definitely looking at it. There are a lot of really interesting things that are happening out there in terms of lawsuits and potentially injunctions and federal procedures that I think will determine a lot of how this plays out over the coming years. And I think that there'll be a lot more clarity for people to actually build up and spin up ideas like this that can actually gain some type of critical mass.
Okay, so there's also something else I just realized. You use two terms, Fannie and Freddie. Can you explain to the audience what that means?
Sure. So these are government, quasi-government agencies that were created many, many years ago to promote and incentivize homeownership in the U.S. And these entities used to be private enterprises prior to the financial crisis. And after that, they got spun and rolled really into being quasi-government agencies. And the majority of mortgages in the U.S. get originated to those standards. And they dictate what can and can't be done from an origination perspective. Everything else that doesn't conform to them goes into the private mortgage market. But they have a tremendous amount of power and influence to determine who actually can buy homes in this country. And they dictate interest rates, they dictate terms, and quite frankly, they are the mortgage market. And that's what allows our interest rates to be very, very low because they are subsidized and backed by the government.
So when you have, obviously people who are coming to you, they're not looking for any kind of subsidy from the government. You're basically just asking them for their deposits, which aren't even going to be touched in crypto. If they're going to be using the crypto option, correct?
That's correct. Yeah, I think that from a subsidy, what I meant to sort of explain is that because they provide certain protections to individuals that buy these mortgage-backed securities,
right?
It allows them to require a lower interest rate because they have that protection. So the consumer really doesn't have to do anything with that. It's really a byproduct of how an interest rate actually becomes lower through that sort of implied government guarantee to an investor who owns that mortgage, not from a borrower perspective.
Well, now that you have, of course, some 100 million in loans, which have been originated through you, And you said before that they've come from over 90 different countries. How are you going to be able to, with the changing laws and regulation and legislation, not just in crypto, but also when it does come to the house buying market, do you think that it's going to be hard for you to keep up with all this legislation, or do you have this evil team of lawyers who are rubbing their hands in the back, who are ready to pounce on anything that could possibly disrupt the Milo vision?
Yeah, we definitely have a fantastic legal team. Lots and lots of folks over there that help us go through this. I think fundamentally we took an approach that regulation and compliance was going to be an important part for us. So that's something that we thought about day one. So we're constantly monitoring it and understanding what are the limitations. So much of what happens is on a state-by-state basis and really on how you actually do your loans. That loan then, is it going to be someone that lives in their primary home, or is it going to be living in an investment property? And there's different criteria for each one of them. And we constantly have to just monitor it because new information that's always being introduced, and we'll just have to adapt to it. So we're building a business to be around for a long period.
Well, I mean, look, the crypto lender BlockFi had 1.8 billion in open loans at the end of June and $600 million of exposure, suggesting that, of course, their loans are collateralized at a pretty high ratio. Yeah. So when you see what's happening, because you have a very heavy finance background, when you see what's happening with crypto lenders like BlockFi, you see that, this is leaving a company like BlockFi with exposure. How do you make sure that when people are looking at investing in something like your real estate product, that they're not maybe being, and I'm talking about people who are obviously like institutional investors, I should say. So this is really a retail investor product, isn't it?
Mm-hmm. It is. So, yeah.
So this is really a retail investor product, but do you have institutional investors who are saying, listen, we want to invest, we've got a portfolio. Have you gone down the institutional investor route?
We do have individuals that want to buy larger properties and commercial properties. But we've been focusing primarily on residential properties that most individuals are buying and acquiring as investments. So they have someone that's in the property that's paying rent and there's cash flow to it. And that ultimately is how they plan on making mortgage payments. So those are primarily the consumers that we're working with. I think from a company perspective, we have individuals that are borrowers that need our capital, because ultimately we're financing up to 100% of the transaction with our dollars. And then we also have our partners, which are either banks or institutions or other firms that allow and give us additional capital so that we can scale out our business. We don't take deposits from individuals, from borrowers, from anyone to be able to go out and do our loans. So I think that our business is definitely structured in a different fashion than it would be for many of the crypto lenders that are out there, where they're taking consumer funds and then using that to go out and do loans and really do other things with those assets. We don't touch our consumers' funds. They're there and their digital assets are there and they're held in storage. And our capital comes strictly from our own equity capital in addition to our institutional partners to go out and lend dollars. So, after, having launched this product earlier this year and being able to get lots and lots of feedback from consumers, we've definitely seen the desire for other variations to our product. And we're going to be coming out in the following weeks with some updates and some changes that I think for the broader crypto community is going to be welcome. And we think that fundamentally makes the solution even better. And that's really been because we've been able to get out there and close transactions. So, we're really, really excited as a team to be able to release that. We recently announced that we've closed over 10 million, and we hope that we're going to be able to close many, many more loans because of these improvements. I mean, we've hired another 20 people in the last sort of quarter and a half. So we're in the process of making sure that everybody's integrated and learning and documenting and, and tweaking and really going out there and doing more and more transactions. So we're ramping up to make this into something much, much bigger. And, we'll see where the world is and that'll have an impact. But ultimately, we're going after this in a meaningful way.
Well, Josip, I really believe, and I don't say this about every podcast comes on, I really believe that you have an amazing product, and I really think you're gonna stomp the world. I think you're gonna really shake it up, and I think you're gonna make it.
Thank you for saying that. I know you've spoken to lots and lots of people, so that carries a lot of weight. Wow.
Yeah. We've taken 200 of them off, but I think there's like almost 200 back on. And of course, there's like 20 in the hopper. But yeah, so yeah, spoken to, that's just on podcasts. But yeah, I definitely think that you guys have something really amazing. So everyone, as you know, Milo is inviting you to come and get your crypto mortgage. And the way you do that is you go on to milocredit.com. That's milocredit.com. So before we close out, thank you again, Josip. It's been really amazing, and we're going to keep an eye on you.
Absolutely. Thank you for inviting me. It was a pleasure to be on the show.
Well, it was a pleasure for us, for sure. I would like to thank all of our listeners for tuning in to this episode of Crypto and Blockchain Talk. Please remember to tell your friends and family all about these beautiful podcasts, where we stream on over 70 different podcasting platforms. We have a partial list on cryptoandblockchaintalk.com. We'll get that updated for you as soon as possible. But don't forget, we also stream these beautiful podcasts on our sister radio station, www.crypto24radio.com. That's crypto24radio.com, playing 24/7 around the world for your listening pleasure, news, music, and more. Furthermore, we love to hear from you. And of course, you can contact us through our social media on Instagram, Facebook, and Twitter. But on top of that, we love to hear from you directly. That's our preferred method of communication. So please feel free to email us. Yes, email us at education@savvydigital.com. That's education@savvy, S-A-V-I-I digital.com. When you tune into us, you have no idea what it means to me and my team. We appreciate it so much. We really don't take you for granted because we really care. So please be safe, take care of yourself, and goodbye for now.